Joining me now is Tal Cohen, Executive Vice President of North American Market Services right here at the Nasdaq. And we're talking all about the Russell rebalance. I love the Russell rebalance. I know it's a big day, but tell me why you think regular people should care. What is it that they need to know about the Russell rebalance before we get into the depths of it?
Sure. So let's start with what it is. It's an annual reconstitution of all the companies that make up Russell's U.S. indexes. And so why does it matter that we're doing this? Well, we have a lot of freshman companies that are coming into the rebalance this year. You have $9 trillion of assets, either in ETFs or in mutual funds that are benchmarked to the Russell, so it's a meaningful event. And last year alone, we traded $39 billion, or 1.2 billion shares in the close itself.
Yeah, it was in like 1 second.
In less than 1 second.
In 1 second, you traded this enormous, almost $40 billion worth. And when you talk about the $9 trillion, a lot of folks have ETFs and they're tied right to these Russell indices. I saw some of the newcomers, including Uber, Lyft, Spotify, and Beyond Meat. Now, where are they going in?
So these are some of the impressive freshman class that we've had this year. And really, it's been different than other years because of some of the names you've just mentioned. So when they come in, you have your adds and your deletes. And so these companies who meet the qualifications will come in, and now you're owning these companies in the ETFs or the mutual funds that you own as an individual investor.
PagerDuty too, right?
That's right. That's right.
Were you excited when you saw some of these names? I mean, a lot of these are high-flying IPOs.
I think so, because people want to know that they can own these names without having to buy them individually over time. And so if you want broad market exposure, if you want to own the U.S. markets, which, by the way, are near an all-time high and growth is doing well, then you have an opportunity to do that through the Russell.
Talk about the different Russell indices, the 1,000, the 2,000. I saw that Apple lost its top spot since 2012. It was at the top spot, and now it has slipped down. Microsoft and Amazon are actually ahead of it now. So what are the differences between the Russell 1000, the 2000? What's rebalancing today?
Sure, that's a great question. So these indexes are trying to essentially reflect parts of the market. So when you talk about the 1,000, 2,000, 3,000, it's the top 1,000 names, it's the top 2,000 names, it's the top 3,000 names. As an investor, how much of the stock market do you want to own? What part of the stock market do you want to own? Do you believe in large cap tech names like Apple and Facebook, and is that what you want to own? Or do you want to own some of the more growth-oriented companies that are at the end of the spectrum, at the bottom of the spectrum in terms of valuation, so small companies?
Right, we call the Russell 2000, we often refer to it as small caps.
It is.
Right?
That's right. That's right. The Russell 3000 covers just about 98% of the
2000.
US. The 2000?
Right.
Well, the 3000 I thought also.
Is that the micro caps?
Yeah, it
right?
goes all the way through. All the way through when you get to the 3,000. Mm-hmm. It's effectively the entire market.
Mm-hmm. And so when we talk about the volatility going into the close, it's not, I mean, every trader is at his desk today, right?
Nobody's taking a bathroom break.
Because this is an annual event. It's a big deal. And when we talk about the Russell indices versus the Dow or the Nasdaq, I mean, what's so special about the Russell?
Well, the Russell has been one of those industries that have been around for a long time. They're a big brand, and their focus is really on capturing the entire market, the breadth of the market, more than some of the specialized indexes that you see from others, including the Nasdaq 100 and other indices, which allow you to own a part of the market, a particular part of the market, but Russell's really focused on the entire market.
So as the Executive Vice President of North American Market Services, I mean, when you're looking at the big picture market, I mean, what are you talking about every day?
Well, what we're talking about every day is...
I mean, looking forward, what's going to be key now?
Yeah, so we're thinking about our economy in two different ways. One, at the macro level, as we look at the trade tensions that we have, we look at interest rates, and then we look at our own markets in terms of public policy and our work with the SEC. And then finally, we're looking at trends within the industry with the buy side and the sell side customers in terms of what they're asking us for. And so we're trying to keep up with trends at all three levels.
Right.
Service our customers, which are the big broker dealers, but at the end of the day, they're end investors, there's mom and pop, there's the mutual funds, there's exchange traded funds that all are housed on Nasdaq. So these are all our customers, all our clients.
Right. I mean, when you think about it, there's plenty of transparency now, much more than ever before. I mean, the Fed has been driving the market to a certain extent, right? I mean, as soon as Powell turned more dovish, the market started to get a nice jump. I mean, what are people talking about the Fed cuts, the rate cuts for the back half of the year? What are you hearing?
It's interesting because what I'm hearing is that it's the first time time in a long time that the market is completely priced in these cuts in a way that it's almost if the Fed came out and didn't do them, we'd see a backlash from that. Right. And so that's one. Two is
and when you say these cuts, you mean 25, 50, or 75 for the rest of the year?
Oh, at least two. At
right,
least two.
At least two cuts.
At least two cuts. And then finally is just growth continues to beat value, which has been a trend and a theme in our markets now.
Does that surprise you?
A little bit, but now with low interest rates, you would think it would favor some of the smaller cap companies, but it's actually working the other way, where larger cap companies are using it to do deals, a lot of deals. So a lot of deal flow is still taking place because money is cheap.
All right. Tal Cohen, Executive Vice President of North American Market Services here at the Nasdaq. It's great to see you. Thank you so much.
Thank you.